For decades, it was one of the world's biggest and most important companies. Now, almost 50 years after AIG morphed from a small Asia-based operation into a global insurance giant, it's turned in the biggest quarterly loss in US corporate history. The firm insured many of the bad assets that arose from the US mortgage crisis, and AIG can't afford to pay out on all those policies. The US Treasury still considers AIG too big to fail and is modifying the terms of a multi-billion-dollar bailout and adding a further $30 billion. It's the fourth time the US authorities have stepped in to rescue AIG, which has already received a whopping $180 billion in government aid. Compare this to Citigroup, which has taken $50 billion, and Bank of America, $45 billion. The main stock market in New York was sharply lower in early trading on Monday, dipping below 6,900, mainly because of AIG. But the bad news didn't stop there with the insurance giant. On the economic front, US construction spending was down sharply last month. And in Europe, one of the world's biggest banks, HSBC, turned in a huge loss and issued an $18 billion rights issue to raise money. Even a surprise increase in US consumer spending couldn't raise spirits. Deep discounts, as much as 90% off, brought in the customers all right, but badly hurt the bottom line of retailers. Terrett, Al Jazeera, New York.